Time for a crypto market update, December 13th, 2025. We're going to talk about two of the most important central banks in the world and risk on assets. So if you find this video helpful, please give me a like, a follow, give me a number 5 in the comments section, and share it with a friend. Okay, so crypto market in an obvious compression zone. The FOMC, the Federal Reserve, decided to cut rates, and they announced that they'd start treasury bill buybacks, which they have already commenced as of yesterday. Now, this is going to eventualize as very bullish behavior. However, it takes some time. So I would say that the FOMC announcement event, whatever you want to call it, Powell's speech, kind of landed neutral so far, because equity markets ended up making a new all-time high. Russell 2000, S&P 500, even gold pushing up and flirting with its all-time high again. Gold in an obvious Wyckoff distribution, potential double top scenario. Equity markets just aren't out for the count. They're ready to keep pushing higher, especially that Russell 2000. That higher equity market, that durability of higher highs and higher lows, is what's going to bring or drag crypto up the mountain. Now, the other central bank that we need to mention is the Bank of Japan. They actually did us a favor yesterday. While Friday was generally a loss on the books for many crypto and equities, the Bank of Japan had announced, or basically came out and did the whole smoke signal of, yeah, we're going to raise interest rates on December 19th, which gave the market time to absorb this. And I think now we're already pricing in that rate cut. So now it doesn't have to be this looming dark cloud that the market's scared of. I know I'm personally getting tons of questions. What about the Bank of Japan? What happens if they raise rates, etc.? We already know. So for now, the crypto market's not necessarily showing stress, it's showing compression or absorption, really almost like a positioning structure. Definitely a reaccumulation zone from a Wyckoff method standpoint, where you can tell over-the-counter and whales institutions are simply adding to their bags at the neutral price point of around 90,000. Not really acceleration, but there's also not necessarily stress or devaluation. So, what happens next? Wouldn't you like to know? Everyone wants to tell the future, but no one actually has the capability to do that. So, I like to teach my members to have an investment thesis that's driven by data, not emotion. What I see happening right now is expansion of risk-on capital